What's up everyone? No need to adjust your screen settings. I just thought I'd clean up a little bit, bring some order to the madness. I've got a fresh cut here and a fresh look at the legislation for you. So let's go. In a prior video, we asked you to take a look at the detailed table of sections and to get an idea of what's inside Division B, subdivision A, B, C, D, and E. Let's just quickly review that. So in Part 1, Division B, we have Subdivision A, which relates to the income or loss from an office or employment. In Subdivision B, we have the income or loss from a business or property. In Subdivision C, we have taxable capital gains and allowable capital losses. Now, in case you don't remember what a taxable capital gain or allowable capital loss is, let's do a quick review. So you might be asking yourself, oh, what is a taxable capital gain anyway? Proceeds of disposition, or POD, refers to how much is received for the sale of some item, specifically a capital item. So we're not talking about inventory here, but some other asset, maybe like a building or shares. From the proceeds of disposition, we subtract the adjusted cost base, commonly abbreviated as ACB. You can think of this as the cost of what's being sold. So the cost of the shares as an example. The result is a capital gain or capital loss. This number is at 100%. We haven't done anything to it yet. And we're not going to include either a capital gain or we will not deduct a capital loss from our calculation of income. What we do is we take the capital gain or capital loss and we multiply it by an inclusion rate. Currently it's at 50%. That yields either a taxable capital gain if it's a positive number or an allowable capital loss if the number is negative. We can go back to our quick review. Now that you know what Subdivision C is kind of talking about, recall that Subdivision D are other sources of income and Subdivision E are deductions in computing income. The example I think we used in an earlier video was a contribution to a registered retirement savings plan. In this video, we're going to review the ordering rule. And to do that, I need you to find a specific piece of legislation in the Income Tax Act. So let's quickly review the concept of a citation. A citation is a specific piece of legislation or provision for which there is a specific format. You know that there is a section, and a section, I've written 1 to 260, but I think it's much more than that, to 281. All divisions contain at least one section. New sections are added with a decimal. So if the legislators needed to add something between section 12 and section 13, they would go to 12.1 or 12.2. Sections can be divided further into subsections. These are designated with an Arabic numeral in brackets. Subsections are further divided into paragraphs. Those can be designated in lowercase letter in brackets. And then we can have a subparagraph. And a subparagraph is designated with a lowercase Roman numeral in brackets. We can even go beyond that into what's called a clause and a subclause. An example would be 61BX, and that would be written as the number 6, then bracket 1 and bracket B and bracket X and bracket. I could also say that as section 6, subsection 1, paragraph B, subparagraph X. Citations are really important to understand. We use them in order to find any piece of legislation in the Income Tax Act. You can think of a citation as an address or a set of coordinates, but instead of finding a house or a restaurant, we're looking for a very specific piece of the law. Let's try one out, okay? I'd like you to turn to paragraph 3A in the Income Tax Act. Actually, before you do that, let's just take a moment to think about what I said. I said paragraph 3A. I mean section 3, paragraph A. What? What was that? No, this is different. Come and tell them that. That's okay. She's calling me a hypocrite because once, like 7 years ago, I may have suggested that she doesn't always say exactly what she means. But this is different, okay? This is just the way it is. People say paragraph 3A, implying that 3 is the section. Don't side with her. Okay, getting back to serious stuff here. To get to section 3, what do you do? To get to any section at all, really? Up until now, I've been asking you to turn the book sideways, find those demarcations, go to the first page of the first demarcation. Well, now what you can do is you can go to the last page of the first demarcation. Right at the end, if you flip the page one time beyond that, it's when the actual sections begin. And you might start off with section 1, and then you'll get to section 2 before you get to section 3. You might have to flip the page a couple of times. We can do it. And eventually you should arrive at a page that kind of looks like this. One thing that might help you navigate the pages if you're using a physical income tax act is to let your eyes look at the top left-hand corner of the page. That will show you what section and subsection this page begins with. So where it says related provisions there on my page, those related provisions relate to section 2, subsection 2. So I know I'm getting close to section 3. And eventually you should be able to find section 3. I've stylized it a little bit for the purposes of this video, but this is what it looks like, and this is just a straight photo from my phone of the Income Tax Act. So we'll get the highlighter here, and I'm going to read to you. It's story time, everyone. Section 3, Income for Taxation Year. The income of a taxpayer. For our purposes, this will be an individual. The income of a taxpayer for a taxation year. For now, we will consider this to be a calendar year. For now. For the purposes of this part, if you're using a physical book, you can let your eyes go to the top of the page and you'll see where it says Part 1. Back to the legislation. Is the taxpayer's income for the year determined by the following rules? In other words, we're going to determine what the taxpayer's income is by applying the following rules. So let's read what those following rules are. We start off with where I wanted you to go, paragraph 3A. And paragraph 3A says, determine the total of all amounts, each of which is the taxpayer's income for the year. So we're looking at income for the year. The year, again, is referring to taxation year, and the taxation year in this example for now is referring to a calendar year. Now, we see a bracket. It says, other than a taxable capital gain from the disposition of property. Okay, that's somewhat interesting. Paragraph 3A is asking us to ignore taxable capital gains. That's because there's a different paragraph that deals with that. Let's go back to it. From a source. A source is referring to anything that can generate income. So a job, a business, property, things like that. Inside or outside Canada. That's a clever way for them to say worldwide, intergalactic, wherever you are, tax applies, including, without restricting the generality of the foregoing, the taxpayer's income for the year from each office, employment, business, and property. So the ordering rule found in paragraph 3A says that you have to calculate for each source, so for each business and for each job and from each property, etc., does the taxpayer have net income? Do they have income from that source? So for a job, yeah, it's probably going to be income. It's pretty hard to generate a loss being employed, right? You wouldn't pay somebody else to go work for them. And if you would, call me, I have work for you to do. But it's quite possible you could have a loss from business. And that's going to be dealt with elsewhere. Paragraph 3A is looking for each source. What is the net income? And we're going to consider it there. In other words, that's going to be the first part of our calculation. Let's move on to 3B. And 3B says determine the amount, if any. If any means you might not have an amount once you do all of the work, but you've got to do the work to find out. So let's do it. By which, this is a subparagraph, our first subparagraph. Should we mark the date on a calendar? It's a big moment for us. The total of. That means you're going to add things together. Clause A, look at capital A. All of the taxpayers, so all of the taxpayers' taxable capital gains for the year from the dispositions of property other than listed personal property. And then clause B, the taxpayer's taxable net gain for the year from the dispositions of listed personal property. Listen, we're going to deal with listed personal property later on, much later on. So some future video will deal with that. For now, we're going to ignore it. 3B says we take our taxable capital gains, and by how much does that exceeds? Subparagraph 2. The amount, if any, by which the taxpayer's allowable capital losses for the year from the dispositions of property other than listed personal property exceed the taxpayer's allowable business investment loss for the year. We're going to ignore allowable business investment loss for now as well. 3B is essentially saying determine the amount, if any, by which the total of our taxable capital gains exceed our allowable capital losses. Determine the amount, if any. So if our taxable capital gains do not exceed our allowable capital losses, there is no amount exceeding in that case. The smallest number that you can have as a result of 3B is 0. If you end up with a negative, we'll keep track of the number, but 3B itself cannot have a negative in it as we go through the ordering rules or the ordering calculation of section 3. Let's move on to paragraph 3C. And 3C says determine the amount, there's that if any again, by which the total determined under paragraph A, that means 3A, plus the amount determined under paragraph B. So simple terms, what amount did you calculate as a result of paragraph 3A? Add it to the amount that you calculated for 3B, and then by how much does that exceed the total of the deductions permitted by subdivision E? So taxpayers might have some deductions available to them as a result of the law or the legislation that resides or has been organized into subdivision E. We looked at that in a prior video very briefly, right? Those sections begin with section 60 and there's a bunch of different things there. One example that we talked about, I think, was the contribution to a registered retirement savings plan. So what 3C is telling you is that if there is a positive amount, if there is an amount that exceeds those deductions in subdivision E, that's the amount you're going to have. You can't have an amount otherwise. So if it results in a negative, we're going to keep track of it. But for the purposes of this calculation, if you end up with a negative amount, you're just going to make it 0 there. And then we have 3D. Determine the amount, if any, by which the amount determined under paragraph C, again, the if any is important. So there might not have been an amount in paragraph C. But if there is, by how much does that exceed the total of all amounts, each of which is the taxpayer's loss for the year from an office, employment, business, or property? This is what I was talking about earlier when we were looking at paragraph 3A. if you have a net loss for a business, you don't deal with that in paragraph 3A. You deal with it down here in paragraph 3D. Paragraph 3D also talks about this idea, an allowable business investment loss. We'll ignore that for now, but that's an important topic in taxation, and we'll come to it later. Let's keep going and take a look at paragraph E. Before that, it says, and for the purposes of this part, paragraph E, where an amount is determined under paragraph D, for the year in respect of the taxpayer's income for the year is the amount so determined. In other words, if you do all of the stuff it tells us to do, if we take 3A and add it to 3B, subtotal them, and then subtract the subdivision E deductions, and then we subtract any business losses or employment losses or property losses, if we still have some amount left over after all of those steps, that's going to be the taxpayer's income for the year, specifically their net income for tax purposes, or NITP. But what happens if we had a negative earlier, or we just don't have an amount by the time we get to this point? Let's keep reading. In that instance, we look at 3F, which would be in any other case, the taxpayer shall be deemed to have income for the year in an amount equal to 0. Okay, so the math could result in a negative number, but for the purposes of this NITP, for the purposes of this section 3 calculation, the smallest amount we can have is 0. In a future video, I'll tell you what we do with that negative amount that we're keeping track of, if there was one. This can be a lot to take in. So subdivision A, B, C, D, and E, and F, which we haven't really looked at in any detail yet, that will tell us how to calculate employment income, or how to calculate business income, how to calculate taxable capital gains or allowable capital losses. What section 3 is doing is it's saying, once you've done all of those calculations, in what order do you put them together to calculate a taxpayer's income? That's why we call it the ordering rule. This video is all about bringing order to the madness. And a great way to bring order to madness is to look at an example. So on the left, I've got just a summary of the section 3 formatting that we ask you to use. The example reads as follows. In 20X1, Jane Smith had employment income of 35 grand, rental income of 6,000, taxable capital gains of 8,000, an allowable capital loss of 7,000, RRSP contributions of 4,000. They started a sole proprietorship that had a loss of 9,000, and you are required to calculate Jane's NITP, that means net income for tax purposes, for 20X1 using the ordering rules of section 3. Before we go any further, I find it very useful for us to identify what we're looking at. Employment income is a subdivision A issue, and it's income from a source of employment. So that would probably be dealt with in 3A. Rental income, and that's income from property essentially, so that would also be dealt with in 3A. Taxable capital gains, this is a number that is already at 50% because it's a taxable capital gain, not just a capital gain of 8,000. We know we start to deal with that calculation in 3B. Allowable capital losses, that's dealt with in 3B as well. The word allowable indicates that this number is already at 50%. RRSP contributions of 4,000. I've talked about this a few times. That's a subdivision E deduction. And so that would be done over there. They started a sole proprietorship that had a loss of 9,000. So that's a business loss, its own source, and we would deal with that in 3D. Let's take a look at how we'd like this formatted. So the answer in proper section 3 format, we would start off with 3A, and we require you to indicate the subdivision. So we have subdivision A, employment income of 35,000. That again is coming from over here. Then we have subdivision B, that is rental property. Remember, subdivision B is income for business or property, income or loss from business or property. Then we go on to 3b, and we have by how much do our taxable capital gains exceed our allowable capital losses? In this example, the taxable capital gains exceed the allowable capital losses by $1,000. Then we are supposed to subtotal all of that, right? 3C told us to take the total of 3A, 35,000 plus 6,000, and the total of 3B, which was 1,000, and add it all together. Then by how much does that subtotal exceed any subdivision E deductions? We had the RRSP contribution of 4,000. So it exceeded it, and we have 38,000 left over. Then 3D said to take the amount from 3C and calculate by how much does that exceed any losses. And we had the business loss of 9,000. And then we were told if there was an amount after doing all of that, that would be the taxpayer's income for the year according to paragraph 3E. That is their NITP. Now, just so you're aware, we're pretty strict about Section 3 formatting. Like, if you don't do it right, we can have a reaction. And you might be wondering why. Why are they so strict about this formatting? A tax return, some of you may have done tax returns, and you might realize that they look like this. And this thing here, which looks incredibly complicated and detailed and overwhelming, looks nothing like what I just asked you to do, right? But we're not here to teach you how to fill out a tax return, at least not right now. And you might find that to be a bit odd. These tax courses are generally designed for people that want to eventually go on to do their CPA, become a chartered professional accountant. And for them, it's really important that they understand and they are unintimidated by reading legislation. And so we want you to order all of your NITP calculations according to the exact way it tells you to do it in the legislation. The way a tax return looks, these tax returns were designed not to help you or me or the average person, but to help the CRA, the Canada Revenue Agency, administer and to help their employees keep track of all of the different sorts of information that a taxpayer could have. And ultimately, the order that everything is being done in, even though it looks a lot more complicated on a tax return, is the order that we're doing it in. So when we ask for Section 3 formatting, you've got to do it that way. It should help you understand that when you need to find something related to employment income, it's in subdivision A. If you need something related to business income, that's in subdivision B, etc., etc. That's the idea. And hopefully that answers the next question that I often get. People say, well, why are we doing any of this at all? Can't we just use tax software? And for those of you that don't know about tax software, let me just go look something up. Oh, well, this is interesting. Did you know that TurboTax has a free version? I didn't. It's a bit embarrassing. I didn't know that. Let's keep that between us. Anyways, yeah, a lot of tax software. Here's an example of the TurboTax website, TurboTax Free. I've never used this before. I pay every year to use TurboTax or something like it. And tax software can make filing someone's taxes very easy. It's like you just answer some questions. It downloads a lot of your data from a government website because your employer has probably submitted something to the government, and it can be a lot easier to do. So a portion of tax as a profession is really getting eaten by software. But that doesn't mean that tax is not worth learning. As it gets more complicated, just think about it. So simpler tasks are going to get automated, right? You'll have sentient AI robots that come after you in your job. If you try showing a robot all of the complexity in here for more complicated tax transactions, that robot's going to be like, nah, son, I got better things to do. don't know. So that's what we've got to do here. We've got to be able to get to the point where we understand legislation itself. And we just took a look at one of the most fundamental and unfortunately one of the simpler pieces of legislation we're going to be reviewing in our time together. So in closing, I'd like to ask you to review the wording in section 3. And I know some people are like, oh, Vineet, can you please give me the exact way you highlight everything? Or, oh, Vineet, can you send me pictures of your tax act so I can see exactly the way you highlighted it? Or, oh, Vineet, can you like come over to my house and like highlight my tax act for me? Like, no, I've spent many years studying and I will not be reduced to like some professional highlighter. Okay, you know what? I'll put a link in the description. You can download it. Fine. Consider me the highlight of your day. Anyhow, you've got to go review section 3. Make sure you're very comfortable with the wording there. I've got to go lose an argument. So until next time, thanks for watching.